at the Credit Union Connection. I am here with Mary Kay Theriault. Welcome.
Thank you. It's
Thank
good to
you
be
for
here,
being
Sarah.
here. Mary Kay is the Director of Product Management of Mortgage at Finastra, company a lot of our credit union audience will have heard of. Can you do a little bit of a more introduction on yourself and your role in the company?
Yeah, so I've been in the mortgage industry over 30 years. I'm dating myself. And I've been in the last 26 years in the technology space. So I was part of the original team that built out MortgageBot to use as ourselves when we were a bank holding company in Wisconsin.
Hmm.
We spun off to our own company and were purchased a couple times and now owned by Finastra. So I still run the mortgage product. So I have the point of sale underneath me along with MortgageBot LOS.
All right. Yeah. Lots of good stuff there. Glad you made it through all the different ownerships. I understand that. So, one of the issues in modern financial services, and particularly for credit unions, is finding the right balance between communication at scale while also maintaining those real human interactions while they're, with their members when they have the opportunity to have some time with their members. So, what are your thoughts on that, and how can the credit union identify that line for itself?
Yeah, so I think, one of the main things is really keeping the interaction with the members. Members want to be able online. Digital first is really where we're going in the industry, but keeping that interaction with those members after the fact. They may apply online, but really keeping that dialogue open, letting them know there is a human being behind that application. So you have to balance it between doing online texting and emails and also that open communication so they know there is that human being processing their loan.
Right. Yeah. Some of the AI text bots have gotten pretty good. But so yeah, it's good to see, having a human face behind it for sure, especially like you said, in credit union land. Um, so modern member-centric banking, particularly with mortgage applications, can be challenging because they take forever, or can. And credit unions are working toward adding that, the modern services. They're finally, I think, ready to move forward, and some definitely are. And the delivery systems for new business and loyal and driving loyalty as well. And but how can credit unions really emphasize that while still keeping up with as much technology as possible to create the efficiencies they need?
Yeah, I think one of the things we always tell our customers is make sure that you're meeting the customers where they want to be met. So having that online channel so that they can see your programs, they can see your rates, they can even see your fees. And then if they want to do that online application, they can, but you can also have that in branch um, opportunity along with the loan officer. So have the three different levels so you can meet your member where they want to be met. Some will start online, do their research, see what your rates are, and then they'll reach out by phone to that loan officer. Others, they don't want to call that a loan officer. They just want to do it themselves.
Hmm.
And then have that online approval at the end of the application so you're capturing that member right away and they're not going to go look somewhere else. We think that's really important on the point of sale is to really capture that member so they stay with you. If they don't see you have products online, they may go look somewhere else. They may, hear of the bigger giants in the industry and go check out one of those because they hear them in the media. And if they don't see your information online, they're going to try to go elsewhere.
Yes, yes, for sure. I think the website is the new, um, not only a billboard, if you will, but now I think credit unions are looking more toward using it to convert as well, uh,
Hmm.
while still maintaining that human touch that they're known for. Um,
Right.
And so, where should credit unions start? How do they go about leveling that playing field between the big guys that you mentioned?
Yeah, I think it's really looking for that technology provider that brings you what you need, but not adding that layer of complexity. So one of the things we strive for here is simplicity. We call it no code, low code. You can set us up without having an IT department. You don't need a programmer to go and do any special coding. So really bringing that simplicity, ease of implementation is the start. So who can you implement easily with without doing a lot of customization? We call it configuration here at Finastra. So you can configure your own products, your own fees, your own text. So it is you talking to your members. So it is all configurable. Then you
Mhm.
also want to look for those integrations. So who has a lot of integrations to the different providers out there? Because the more streamlined you can make that application, the more likely you're going to capture it. So things like asset verification, income verification, online approvals with Fannie Mae and Freddie Mac, because we know that borrower is looking for that online approval. So that they can, if it's a pre-approval, they may be wanting to apply on Saturday, and if you have that online approval, then they have that approval and they can go buy that house or put that offer in on that house they want to on the weekend when maybe your loan officers aren't available. So really looking for somebody who has that full digital experience, but then also provides you with all the tools on the back end to process that loan efficiently.
Mhm.
One of the things we have added within our system is what we call workflow automation. So taking documents that that processor receives, putting them in through an OCR and data extraction, and then comparing it to the rules out there that the GSEs have provided so that we can pre-process that loan, cutting down we say about 3 to 4 hours on processing time of every loan application. So really bringing in those efficiencies on the back end so that you can close those loans quickly. So not only do you want to, set up easily when you're doing an implementation, but then also bringing in those efficiencies in the LOS for processing those loans.
Yeah, yeah, and you don't want to go through the whole process and like as a human, and then you get to the end and you want the borrower to sign in, and it's like, oh well, line L25 was not filled out or whatever, right?
Right.
It certainly cuts out the human error aspect too, which I'm sure saves time also. Um, and so, how can they best judge the fintechs that they're evaluating in this area? I mean, you touched on it a little bit as far as like an all-in-one, but what are some of the best characteristics that the cranes should be looking for?
Member experience, number one, is what is on the point of sale? What is your member experience? Because your member is going to remember if they didn't have a good experience. They don't usually remember, oh wow, that site wowed me, but
Mm,
they did not have a good experience. So really looking first and foremost on the point of sale side is what is the member experience? What is the path they're taken through? How easy is it to use? And how friendly is it? We don't want the member to get frustrated halfway through and then they bail out, right?
rage
So
quit.
really look at that member experience. And then on the backside is how efficient can they make you? So as mortgage rates hopefully decrease and we get back into a refi market, you don't have to add staff to process more loans. How efficient can your processors and loan officers and underwriters be within the system to quickly close loans without getting any buybacks from a GSE if you're selling them online?
Yeah, yeah, and actually, I want to dig a little deeper into that. Something you mentioned there about the refis coming up with the interest rates dropping, and you know, I'm sure there'll be plenty of people reinvesting that back into their homes because they can't afford the other homes that they would want to
Right.
begin with. What do you see for the mortgage market in the next year or so?
Oh, I wish I had a crystal ball. I wish I could tell that that rates are gonna drop and we're gonna get back into that refi market. We did see recently with some decrease in rates, a little uptick in applications. So that's a good sign. If you listen to the predictors, they're saying they're going to come back down. I don't think we're ever going to see in my lifetime probably the 2 and 3% we saw back in 2020. I just don't see us getting back there. Hopefully, we'll get down back into the 4s and 5s. Maybe 4 is probably stretching it. But I think even if we get into the 5s, even high 5s, we'll get into a little bit of a refi market again from those customers who closed last year in the 7s.
Yeah. Tell me about it.
Yeah.
Bought a house last year too. Um, so, speed obviously big part of being member centric, and you talked about it a couple times. But especially in the mortgage field, there's hundreds of papers and pages to sign off and go through. Um, and so, how are you speeding? You mentioned you save 3 or 4 hours. Can you go in a little more detail about how credit unions can speed up this process?
Yeah, so one of the things that we do online is at the end of the application, we're going to ask the borrower for the documents that we need in order to process their loan. So, right at the time of application, if you tell me you're employed, I need your W-2s for the last 2 years and I need your pay stub. If you need funds to close, I need your bank statements. So, we're going to provide you a customized list of those documents the member needs to provide. We're also going to add in some AI in there, an AI agent to actually look at those documents, make sure they are what you told us they are. So if I asked you for a W-2 because you told me you're employed, but you gave me a 1099, the agentic agent will come back and ask you, are you sure you're employed or maybe self-employed because you gave me a 1099? So we're going to do that right away at the time of application so that when that processor gets those documents in, they already know they're good documents or as good as we can be.
Hmm.
And then from there, we're going to actually put them, once they're in the LOS, put them through a workflow, what we call workflow automation, where we read and extract the data and compare it to what the borrower said. So if the member told us they were employed at Finastra LLC, but it's really Finastra Corporation, our system will actually extract that data, compare it, and say, you might want to just update this. And with a click of a button, we're going to update the system so the processor doesn't have to do what we call stare and compare. Today, they're going to go look at that W-2, they're going to look at what's in the system, they're going to stare it and go, oh, yeah, it's wrong. I got to go into the LOS and change that. We're doing that for them, cutting off. That's where we're going to save the 3 to 4 hours on every application by doing that all electronically or through AI. There's AI in there, there's machine OCR and machine learning in there. So we're doing that all for them so that they can really then focus their time on those applications that they need to. So the cookie cutter's going to go right through with some automation. And then those processors and loan officers can focus on those loans that are not the cookie cutters. They need a little more attention. They might need some in guidance on how to go through and fix it so they do qualify. Do they need to pay off a loan in order to qualify? Do they need a gift for some more money? So they can work on those loans that really need their attention and provide those members also with the end game of an approval.
Right. Yeah. And then you're saving half a day basically that they can devote to other things, like really helping members that need it. Um, how are you seeing those? I mean, do you find out how those hours are used by your clients after they save?
We haven't yet. We've just actually are rolling this out. We have about 20 clients that are using it today and providing us feedback on how we can make it even better and more productive.
Yeah, because I mean, credit unions, they don't, I mean, their employees are their members. So, they
Yeah.
don't particularly, laying them off is not something credit unions are particularly comfortable with. So, finding other things for them is always important. And
Right.
sure,
Well,
there are plenty of things to do.
yeah, and our goal is that as production increases, they don't have to go hire more
Exactly.
employees.
Yep.
Keep the staff that you have and make them productive so that as volume goes up, you don't have to add more because who wants to go through that cyclical hire, layoff, hire, we've all been there. So this automation should help you keep the employees that you have, but not have to add, because hopefully going online with a mortgage application will increase your volume as well.
Right. Yeah. And the employees aren't staring like you're, I forget what you stare and compare.
Stare and
Yeah.
compare.
That seems like a tedious job.
It is. I've been there. I start, in my
Yes.
before I got into the technology world, I did manage a processing staff, and so I did help, jump in and help on those applications. And yeah, you're staring at those W-2s, pay stubs, making sure they are who the borrower says they are. Everything, the names
Yeah.
are right, addresses are right, and this automation takes that away.
Yeah, yeah, awesome. Well, I always give my guests the final thoughts as we close out for our credit union audience. What do you want to leave? What thought do you want to leave them with?
Well, I think if a credit union is not online yet with a mortgage application, they want to get it, they want to start tiptoeing into that space, because if they're not, their members are going to go look elsewhere. They're going to think they're not in the mortgage business because they're not online. So at least start on the getting your information out there on a point of sale, and then you can always go into the add in the additional features functionality along the way. But having that application out there, even if it's just the application, maybe you don't want to put your rates out there yet, but
Mhm.
start small and increase as you get volume. We always say it only takes 2 new borrowers to apply to pay for the software. Everything else is, you're addressing your members that you already have, but you can do it pretty simply. And if you get 1 or 2 applications that you weren't going to get before, it pays for the system. Yes.
Awesome. Well, thank you so much for your time. I appreciate it. Okay.
Well, thank you, Sarah. It was great chatting with you today.
Bye.
Bye.